give us the signal to begin. Okay, thank you very much, Katerina. Welcome everybody, welcome to my webinar. Broadcasting live from Mexico City. Today is Thursday, March 23rd, 2017, local time 1 a.m., 16 minutes past the hour, 7 a.m., 16 minutes past the hour GMT time. If I'm not wrong, next week I'm going to have this daylight savings thing. But well, remember that the webinar will take place at 7 a.m. GMT, no matter daylight saving times and etc. So don't worry about that. Just be aware of the GMT time. And well, here are my. This is me myself. This is my picture. If you haven't subscribed to my YouTube channel, that's been very quiet lately. I'm going to update it, I believe, today and tomorrow. And if you haven't subscribed, you go to YouTube, you type iiivb Stream Room channel. This shows up and you click subscribe. For the ones interested in following me in Google+, here is how you can find me, iiivb Stream Room. Or in any case, if you don't have Google+ account and you're not interested in opening one, you can Google me this way, Google+ with this symbol. Then iiivb Stream Room. Then in the search, you will find a web page that is my Google+. You just bookmark it. In any case, if you're interested in having updates on my trading setups, etc., that I believe that they merit an update and maybe not a video, just an update. So, well, we have a lot of things to talk about today, actually, and I am opening my charts, because it's going to be a very interesting day, because if I'm not wrong, we have had a major stocks in the stock market sell-off. We have had a, let me open another charting package, because if not, I won't be able to show you the stock market charts. And even though I don't trade the stock markets, at least so far, it's important that we realized why we just had those movements that affected the dollar across the board. We're going to review my latest update on Friday, in 17th, yes, Friday, on the potential setup for dollar-yen, my long-term perspective bullish. But after the FOMC, I updated in the Traders blog post this chart where I put the expected potential price action relationships and price boxes relationship among each other that would result in an eventual movement up or down, and we're going to review that. We have some comments. Oh, FX Rabbit, good morning. Welcome. How are you doing in the daily stock options? The last time I checked, you were first place. I just dropped to I don't know what place. It's really tough for me. I'm just figuring out. Maybe next month I will be better. But yeah, it's tough, and I just saw that you were in the first place. Well, I just took 3 days off because I had to fix some things in my time zone. So I am just coming to update my latest outlook on dollar-yen that I posted on Friday, how it turned out to be, and to explain it. And to, by the way, I was just about to talk about precisely the stock markets, because let me launch this chart, because that moved all the money across the planet. And in the mass media, it's been saying that it's a panic, whatever, etc. But I don't think so. I just believe it's a technical, natural correction. We're going to review why. and why that should, how to say it, should continue justifying, sorry, should continue justifying that the bullish trend on dollar yen is still active. Actually, I still think it is active. I still think it is moving upwards. So we're going to review that, but using that in context, because after this sell-off, going even below the money that started this rally from the 112 to the 115.50, a lot of people, of course, were thinking twice that maybe this was a short-lived rally movement, maybe only a correction once the upside, pointing further movements to the downside. I don't think so, at least understanding it from the, how you say it, technical, not fundamental perspective. It's not the way it should go. But of course, everything can happen in the financial market. So we will try to see what's next, to try to anticipate the market movements, and hopefully information here will help you to develop your own trading ideas. So let's begin with the first part. This is the one. Here it says, FX Rabbit, I am former DSO champion, don't forget. Oh yeah, yes, I just forgot, sorry. I was challenged by a friend to break the balance record since contracts have been changed to 5,000. Knock on wood, let's hope I do finish in the first position. Forex has been really crazy lately, yes. It's been having wild movements. I remember just saying after this, when I posted this, that it was more or less here when the price was here, that I expected a very quiet week. And of course, I was completely wrong. We're going to review that again in context with the stock markets, just to see what's the reason on the recent sell-off and why this affected this. Well, as you remember, I was explaining that this price range boxes is how I understand the relevant price relationships between among each other, and the ultimate relationship with the actual price action should end up pointing where the market shall end up moving. When I posted this, the price was here, so we closed last week saying that it depended on if the market stay above at that moment this ascending triangle in the 1 hour. It should tell it should have told us what to expect. What I was expecting is the market shall hover here. I was saying that according to the seasonality, or I don't know if you want to call it that way, spring officially astronomically hit Earth on Monday at, if I'm not wrong, was 10 a.m. GMT time or something. So I was using that thing that because we as humans, maybe if we don't realize it, we react to those events of planetary scale. Maybe if we don't realize it. It's the same thing that maybe, that is more or less the concept of astrology, that maybe if you don't realize some things that happen when some planets align, etc. But this thing is very accurate. I mean, spring hitting the northern hemisphere of the planet, of course, changes a lot of things. How many, we really don't know. How they affect us psychologically, physiologically, biologically, we really don't know so far. But it is expected that maybe the reactions are more like why birds follow some path to migrate from colder zones to cooler zones to more template zones, where it's following maybe some how you say it, gravitational thing or magnetic field in the planet that maybe is invisible for us but not for these animals. Okay, it's the same thing. Maybe we have something that makes us react to this kind of seasonalities. So you can see here, I left this this cliff here. I was expecting maybe the market should hover here, and I was saying that if for some reason the price was hovering here and was not able to jump above these price boxes before the official entering of the spring, we could have a potential, for example, if the market was hovering here, facing this resistance and this, maybe to test this and to cliff and to go down the cliff. Well, that happened, but not in the way that I expected. Okay, I was expecting this to hover more or less here during this week. But if this support failed to do its job, and then the price action was not good enough to make it jump above before this date, above here, then the chances were to the downside. Well, from the very Monday, it rode this line, it retested the lowest part of this, then it even made a lower low, then entered into the box, then made a lower low, and then just look at this. This is the astronomical spring entering the Earth, and this is the most recognizable March 21st, but actually it was March 20. So this cliff that I opened here signaling huge risks. Why? Because here you have plenty of resistances and you have a cliff to the downside. So yeah, the scenario happened, not the way I expected it. I was expecting maybe if this was going to fall, maybe the price was hovering here and then falling down. Of course, it sold off from very Monday. It tried to stabilize here, but it simply didn't make it above. So in this precise zone where I put beforehand the cliff, beforehand the potential cliff to the downside, it just almost immediately it started and it started selling off up to where? To the 111. Here it says we have some comments, especially dollars South African rand, says FX Rabbit. I don't know if you follow that currency pair. I tend to follow it, but not to trade it that much. I honestly, this latest maybe 2 weeks, I haven't watched it at all. It went to, if I'm not wrong, some 1.5-year low, then bounced back up some 1,850 pip within 12 hours, just to go back down again 600 pips. Okay, we're going to review that chart then, because that sounds very interesting. Mexican peso tends to behave more or less like dollar South African rand. I've been tracking North Mexican peso for obvious reasons. But well, we're going to review both charts in the next 30 minutes. I just wanted to show you this. It's not for, again, for showing off, because this has nothing to do with showing off. This is when you tune accurately the timing in the markets. When you, in my case, I was explaining that these price boxes, in the way I draw them, are in a very intuitive way. I'm really not following a strict way to draw them. It just if I feel they are right, I just draw them. I've been doing that and been working for me, at least in my live accounts, correct. And well, for the ones that are wondering what happened to my long trade on dollar yen after this in my live accounts, well, when this broke to the downside, I closed it like in here. And I just forget about that very long trade, because I was not interested in facing a potential. Because since this was broken to the downside, of course, look, you can picture in the future the probabilities of this this to happen were very low. To bounce from here to just the idea was that during this gap, that this this time leaps, the market should have been able not just to overcome all the losses, but overcome this resistance. This resistance hit this and then bounce back here. So at the moment it broke here, I realized that the chances were really against longs, at least for the ones that were expecting a more active movement, or at least a consolidation week. So here, I just decided to forget. Why? Well, because I said, okay, the chances are against longs. Maybe the market could simply stabilize here, or could respect this and move down. And this is exactly what happened. So the first lesson of this is I've been showing you, excuse me a second, please. Sorry, I don't know what got through my throat. Excuse me. Sorry. So, well, what we have here, we need to be aware. I mean, I was saying that why I left this cliff open since Friday. First of all, because this pattern, and this is why it's a lot of things to explain. I tend to believe that one of the indirect evidences that human behavior is predictable is that maybe if they are not aware of, they tend to build circumstances that at the end will end up making things happen at some certain specific time in the future. Reading, for example, spring hitting Earth on Monday. What I believe is that the markets, the psychology, energies, whatever you want to call them, even if you're not aware, they manage to, at least the dollar-yen, to build a figure just one or 2 days before entering the planet to help precisely that something important happened to happen that date. Since Friday, this figure, this triangle, and I was explaining that in another webinar, this just this apex, the end of this figure is on March 20 to March 21st. I mean, when you watch the markets long enough, you realize that these things are not random. And for some strange reason, they keep happening all the time. And I mean, not every spring this happens, but maybe in summer this could happen again, or in winter. So at the end, this, in the way I understand markets, is the evidence indirect that people tend to organize themselves unconsciously to structurize that and help something to happen, something important to happen in important dates for humanity, for Earth, in this case astronomical events, planetary events. So, well, this is why I left this cliff open, and it happened. So the lesson is, you have to be aware of this. I mean, you don't have to become an astronomer or to study astrology, no, or astronomy, no. But there are simple things that are like, for example, if you see a pattern that is just ending at the date of when spring hits Earth, just pay attention to it. Maybe nothing important will happen. But if it does happen, it's telling you some days in advance. Of course, the move could have stopped here or something. Here was the only thing that I said on Friday is, in this date, if price is not here, we could have a sell-off. I expected maybe a sell-off from here to here, not from here to here. But at the end, it happened. So this is the best you can have in the financial markets. Just having compasses of what could happen and when they can happen. And if you realize trading is much more important the timing than the direction. Because when you have, for example, this, if somebody took seriously this thing that I posted on Friday, and they just realized at this moment that the price was hitting a resistance after a breakout, and that theoretically if price even being here or here or here, at this moment in time, the possibilities were to have a sell-off, and they decided to give it a shot, and maybe to short somewhere here, and maybe put a stop loss here, or something here, somewhere here. Just to test the waters, just to see, okay, things are in a potential alignment. These boxes signal you this, and that's why I share them. These boxes show you potential alignments, price time. As you can see, those interactions could have led to different interactions. For example, the market jumping here, then back, then move up, then back, then this, and then maybe this down, or maybe doing this and just waiting here and move up, and then here, and then jump, and then here, or maybe doing this and maybe jumping down, jumping up, maybe jumping down, maybe jumping up and then down. A lot of different variations. But that's not the important thing. The thing is that the timing, at some moments, there are more relevant interactions among these price boxes and price action than in other times. Here, the interaction was way more important between these trend lines and these two boxes. When this trend line was broken, the interaction was here and here. And I mean, this is a language. The more time it passed, the less probable the price to hit this was, because it was getting further and further and further from price. And when this happened, that meant that the most likely interaction the price expected was this zone to be resistance and to have no visible support. And this is what happened. At times this won't happen, sometimes these levels are not respected. There was something I was watching since last week in stock markets, because I just commented to FX Rabbit. I tried to make my best in the daily stock option contest that actually I'm not doing precisely well. I just dropped it. It's very tough for me since I don't trade stock, so I'm still figuring out how to trade it. But the thing is that I've been watching the stock markets, and there was something extra that pushed me to believe that maybe we were just about to hit something important. Let me just show you why you should watch the stock markets, because usually when you have low liquidity, low activity in the currency markets, you usually have a lot of activity in the stock markets. I mean, the markets try to move from one zone to another. There are not the only markets the capital flows, flows into, but well, are one of the most important. I wanted to show you this. Let me just find it, please. I believe it was in the Nasdaq. Yeah, it was the Nasdaq. Okay, let me have a picture. Well, first of all, for the ones that maybe don't know what this is, here is the Nasdaq. Well, the index of tech of the United States, Nasdaq. I don't know exactly if this index is the Nasdaq 100 or something. This is the tech bubble, what is called the tech bubble. This is in the 2000. The exact date is March 2000. If I'm not wrong. Yeah, March 2000. Where you have this sudden buying spree for a lot of years, and then they stopped at this level, and then they just sold off. A lot of companies closed here. This was like the boiling water of the tech thing, the internet thing. Like there were, I believe, in the Nasdaq listed companies that just because they have a whatever .com's name, they listed in Nasdaq, something like that. But at the end, internet was just nascent, at least in the shape that we know it now. It started kinda here, but we didn't really have a lot of broadband available for ordinary people. So the real exploitation for internet was just after broadband and after mobile adaptation to broadband, etc. So here it starts selling off. It just dropped for quite a few years, and since this date, that is January 2009, this is a 2008 crisis, you see? Even looking in Nasdaq, this super crisis was not really seeable in the Nasdaq. In 2009, it started moving up, moving up, moving up, moving up, and it just retested some months ago its height. This usually could start telling you that maybe some people would be eager to take some profit out of the table, etc. Let me have a picture in the weekly. And this is the important one. This is the weekly chart. This is the bullish spree, these latest years. Look at this. It has been doing this 1, 2, 3, 4 weeks, 1 month. So the possibilities of hitting all-time highs, overall taking out that two, three. My sound is back. 1, 2, 3. Yeah. Okay. So when I started watching this, I said, okay, maybe we could have something happening next. So everything aligned. Dollar yen is like, at least for me, one of the clearest things to trade now, because it is not polluted by political conflicts, Brexit, a potential surprise in European elections, potential division in European Union, etc. It's playing healthy American economy against very weak Japanese economy. Both were more or less political stability, even though after Trump's, the market started how to read this person, and just started knowing that, well, maybe business were going to be conducted the same way they've been for the latest years. So I said, okay, dollar yen is one of the clearest mirrors that you can watch. It's been doing this lately, these latest 4 weeks. So I said, okay, I believe it's not coincidence. The market is testing this high, this resistance. Plus, we're just about to hit spring. Plus, in one of the most important, and I believe the only real accurate thermometer in the forex market is dollar yen. Maybe this is not a weekly chart. This is a humble 1 hour chart. But the thing is that after FOMC, before and after FOMC, wait me a second, please. Yes. weekly chart in dollar yen. This is daily chart. So everything started aligning. It said, okay, we're hitting highs in NASDAQ, hitting weekly resistance. We're just about to have spring in the northern hemisphere. We have this very suspicious price action in dollar yen after having a huge spree. This is the daily chart. This is the bullish spree. From 112, it got to 115.50 in a matter of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, more or less. And then we had FOMC sell-off, retesting this line. And then this is FOMC sell-off. On Friday, we had this configuration. So after having this FOMC sell-off, plus this triangle thing, this price action boxes interaction, and this very delicate situation for dollar yen to have a healthy range bound at least conduct was to prevail, to make this line to prevail. So when it suddenly dropped, it was opening and because of, okay, the NASDAQ is hitting all-time highs, etc., resistances in the weekly, and then we have a spring here. I said, okay, something important is going to happen in dollar yen. It's going to be exacerbated by spring, by stock markets, by this cliff, and after this sell-off. Okay, this is the daily chart, and it continues selling off. It just got lower to the 112. I was surprised. I was commenting that more or less when the price was here, that we could actually have had a retest of these lows and the trend could be intact. Well, the expected movement. The expected movement in dollar yen is fundamentally biased. This movement to the upside, that I'm not the only one expecting it, is not derived of technicals or no, it's derived of pure direct fundamental things. The United States, it's simply unavoidable that we have at least 2 or even 3 rate hikes this year. At least 1/4 point each. In the other hand, we have nowhere to look how to save the Japanese economy. Okay. So when you put things in that way, it's a no-brainer, the direction of this. At some webinar, I believe it was here, I said that we could even have a pullback to the 112 and then it could start moving up again. I'm surprised the way this has moved below even this bottom. But again, everything aligned. We have some taking profit, some sell-off in the stock market. Because of all these things aligning, this is why this has happened so massively. I mean, if you are a stock market investor and you want to take some profits out of the table and you really don't know when, because the fundamental trend is still up, what you look at? Well, some very practical investors say, okay, it's spring, let's take some profits. You use some landmarks, and what best landmarks that astronomical ones. One astronomical way we measure and we ritualistically follow is the rising of the sun. Well, in my case, I live while in the dark and I sleep while here in Mexico we have sun. But normal, healthy people do the opposite. Ritualistically, according to an astronomical planetary event, they organize their lives. Why not believe that at some moment, money, that it's an energy derived by humans, will follow through? Of course, not maybe in that way, but maybe why not spring? So this is the explanation why I believe dollar yen sold off here. This is what I believe. I still expect that this will jump above. Here, the lower it gets, the more chances to buy you have. What I dislike in the daily chart is that the daily volumes are looking very weak. Here I could have expected maybe more buying interest that is not visible in the daily chart. But if we move to the hourly, is another story. This is the hourly chart. This is, let me put you in context. Okay, this is this. Then we started having this sell-off. And then we started having again. This is the first sell-off. Okay, this was the one first sell-off. Look volume. Then the market stabilized kinda here. Look volume, it's lower than this. Okay. Then started moving down, and then volume started spiking up. Look at this. Let me draw it. Here, it was the first sell-off. Second, it started the second. You can see here is the first sell-off, and this is the second. In this first breakout, that meant that this trend line was broken. This volumes are this. Afterwards, we have lower volume. So even it started moving and continued moving lower, the volumes were not precisely high. Okay, some people tend to read that as a bearish signal and others as a bullish signal. I am agnostic. I just see the things and I try to give them meaning later. But look what started happening when we started having this other sell-off. This, more or less this, okay? Look where it's happening, very close to this zone, just at the time of this time cliff. Look, volume here, higher than this. These two, this is the first breakout, this is the second breakout, this is the first breakout of a trend line, and this is the second breakout of a whole cliff, time cliff, followed a very important support price box. And then we have even a higher volume. Do you remember what I was telling you? Okay, well, so we have divergence. As it gets lower, volumes get higher. Again, some people read this as, it is said that a breakout, if it's not on high volume, it's a fake breakout. So bears could read this as a breakout confirmation through volume to the downside. But there's another way to read it. The lower it got, the more people started buying. It depends on the context. If it was that easy to make money in the markets, just to see a breakout on high volumes, everybody would be making money. Because it would be hell easy to buy on a breakout or to sell a breakout. It would be hell easy. But guess what? It's not that easy. It's a whole complete context. I'm going to explain you why. You remember, I don't know if you remember, that I was telling you that here, when this thing started moving, we made an intraday analysis of this day. we saw exactly that. The lower it got, the higher the volumes. And then what happened after? Boom. This is the same thing. What I expect that this will continue moving up. Not because only this, because this is confirming at least my fundamental expectation. I mean, fundamentals are very hard to contradict. Only Donald Trump believes that he can say that American economy is in ruins, while having the best results ever. I mean, only him defies reality, and not only that reality, he lives like in a parallel world. But well, healthy people, mental healthy people, you cannot fight the results. You cannot argue the results. So this, I said, okay, fundamentals will stir up, and we're just having this. Just look what happened after this latest confirmation in the hourlies made this second highest volume after this important one. First, second, it almost sold and jumped almost immediately after. The reading I am giving to this, and before continuing, Katerina, do we have somebody next? Okay, perfect. So, thank you very much. Okay, so all this put together, I was telling, and I remember telling this, it is not that often that what happened here that was in the, when I analyzed, I believe it was a 5-minute chart at that time. The price making lower lows, and this exact pattern, and then having this huge jump, was something that simply caught my eye. I couldn't ignore it. And while a lot of people believed that the market retesting and making lower lows of these levels could mean a continuation of the sell-off, it just happened the opposite. So these are patterns. Not all the patterns work all the time. They tend to work only 50% of the time. But this is why I believe that at least maybe the sell-off is over. What could help this continue moving down? A continuation of take profit in the stock market. And yes, that can happen, and that can be in a very extensive amount of time and an amount of points. And this could actually continue moving lower. But again, the fundamentals don't change. I mean, even if you have a huge drop of 3, 4, 5% on Coca-Cola stock, for example, that doesn't change the outlook of the company. Those are called buying opportunities. It's the same one. I believe the dollar yen at this moment is like a blue chip in the stock market. It's like buying those super strong, super reliable companies that doesn't mean they cannot fail. We can watch General Motors. They had to be bailed out by the government because they were in bankruptcy, and now they are healthy again thanks to the government. But the thing is that, for example, Coca-Cola has been, it's like the way Warren Buffett invests. He looks for value, for quality, he buys, he doesn't sell. He looks value. He builds wealth. He's not speculating. I believe the dollar yen, it is playing more or less the same way now. It doesn't matter how low it goes. Well, of course, if it goes below 100, that means that something terribly happened. But if it could continue moving down 2, 3, 4, 500 pips below, and that is why this is happening. I mean, the hourly, it's like a signal, a 1-hour chart, having these lows, and buying here and up, okay? So this could be a signal. This is not watching the 5 minutes. Well, here, FX Rabbit says, I have noticed that a retest of support or resistance of the third time never holds. Well, yeah, it is, in my opinion, it's not, it is said that the more it retests, the more reliable it is. At times, it breaks it at the 6th time or 3rd time. be it 5-minute chart or 1-hour chart or the daily chart. Dollar yen going to 100 before Christmas. Well, FX Rabbit is directly having the opposite view of mine. I believe that by the end of the year, dollar yen could have to the 120 or even 130. 130, I believe that could take years, but at least 120, I see it not that because of the fundamentals. I mean, it could go to the 100 and still be bullish, but well, after having a 1,000 pips sell-off, it's very hard to overcome that quickly. I believe that there are participants in the market that would be very eager to do this. The lower it gets, the higher volume to buy. Why that happen? We are just below this line. This is the perfect zone to buy for long-term players. Maybe if we break the 110, more or less the 109.50, then I would then consider a sell-off maybe to the 105. Fundamentally, that could still be bullish, but that won't work for us retail traders. Because, I mean, being a trader is not being an investor. Being an investor, you can buy, for example, here, let's take this as an example. You buy here, it continued moving down. You buy here, it moved up, it moved down. You buy here, it moved up, you buy here. Then it moved down, you buy some more here. But then maybe in the overall, you're in break even if you're doing good money management. So you have almost 1 year spoiled buying and buying and buying, and you have no profit at all. After 1 year, it's skyrocket. So this is more or less the play that dollar yen players are into. It could go lower, it could go lower, it could go lower, and those are opportunities maybe to buy. That's what I believe. Of course, this is the daily chart, not the hourly. We could have, let's say, a retest. I see it very difficult that if the 110, the ultimate support here should be the 110. If it doesn't manage to convincingly stop the movement to the downside, I can tell you, I am sure, I'm not the only one buying here, and I mean big players are starting to buy. If the 110 doesn't manage to stop the sell-off, a lot of them will try to make the price bounce again up to sell here, or immediately start selling off here. But look at this. We're just retesting this support. Look at the quality of this support. You see? This support in the past worked 1, 2, 3. It sold off, then it worked 1, 2 resistance. Then it simply moved up. It moved through this resistance like if here were no reference. Now the market is testing close to those levels, close to those levels, close to those levels. I believe that is retesting this support overall, this one. That is why I believe that we have that buying pattern in the 1 hour chart. We can face further take profit in the stock markets. This is the one. This is the Nasdaq index weekly chart. This could easily move to here. I mean, easily. What could happen if this gets here? If dollar yen continues being related to this, that okay, we just had and why we should watch that? Because it started at the same moment, because of the spring maybe. We started having the sell-off. We started having sell-off of dollar yen. So if that correlation is sustained for the next days or weeks, if this moves here, then dollar yen. Let me close some things first because I cannot find my charts. And dollar yen, this is dollar yen daily, could move to the 110. And I honestly believe that this should work. This is a support zone. This is important. This is not a breakout of a pattern, because this pattern is not that valid. It's already broken to the upside and now to the downside. So this pattern is kind of only reference. It's not like precisely that, because, well, yeah, this breakout to the downside was not good enough to push the price higher. Who says then that a breakout to the downside will indicate then a movement lower? So this is only a reference. This is a support zone. Here you can watch it, how it's played it. You see, it's all this. So all this is support zone. And we have the ultimate psychological support below a support zone. So this is support. This is for long-term investor buyers, I believe. Okay, let's see. Everything can change. We just have a comment by FX Rabbit. By the way, thanks a lot for interacting, my friend. Here it says, many of the stocks that went up on Trump's drumbeat have gone back to their early December 2016 price within the past some days. Dollar yen on Forex is just holding back. Big upset coming between tomorrow evening and Friday's close for the stock markets. Good morning, Wilco. Well, yeah, you are the specialist on the stock market. Unfortunately, I am not precisely that informed. But I still believe that maybe if dollar yen could hover here the rest of the year. Could do this and then jump above, then do this and then jump above, because it takes its time. Dollar yen is a pair that is not in a rush of doing things. It takes its time, and if it wants to enter into a bullish spree, it enters well, this is not precisely a gradual trend, right? But usually this goes in a timely manner. It is like a very patient pair. So yeah, this could hover here. Unfortunately, I was expecting yes, and as I just said, this initial breakout here, I didn't like it at all. Because if the price has been here and then maybe we had a sell-off, we could have had a lot of support in the 112. But when you start a sell-off at the 112.50 with all things aligning that I just explained, well, it's not surprised that it moved this kind of percentage to the downside. So bottom line, to close the webinar, and I mean, these kind of movements give a lot to talk about. Dollar yen thing, since it's fundamentally related, at least in my opinion, to the upside, and now it's not only fundamentally related, now it's astronomically related because of the sell-off that started on spring, and at least in that aspect is now correlated to stock markets. That correlation could break anytime, yes. But at least now it is related to stock markets due to that astronomical thing called spring. And it's aligning the direction. So we can discuss hours and hours, one single pair, one single cross, when this kind of stuff happens. So my major message for you is, yeah, my long that simply, well, I held some lots on long that I closed them like in here, and I forgot about them. The other rest, well, I just made it some here, etc. The active bullish sentiment is over. That is a fact. One thing is the fundamental direction, believe is up, and the other, the technical thing that this is kind of hard to say that is to the upside, because technically this is pointing downwards. I believe that we're in a support zone, so maybe this speculation qualification for dollar and yen is over. Maybe it will simple sell with stabilizing the price over in the 112, maybe kind of 111, 110, 111, 12, 30, 40, then coming back doing those, something like this. Of course, if you have dollar yen ranging, is what traditionally yen crosses are so attractive because they tend to range very nicely. So yeah, we are entering into the traditional behavioral pattern that we can profit trading it in ranges. Of course, I need to confirm that if you decide to short because of you find a good range here, just have in mind always, fundamentally, at least so far up to date to this second, is to the upside, fundamentally. So we really don't know when we have a hedge fund, a huge investment bank buying $1 billion of dollar, selling its yen and buying $1 billion of dollar, and then maybe making this thing move 100 pips in a snap. And then the market could deflate. So those are the risks that you need to measure if you short dollar yen. That's a moment you could have those scenarios happening. And if those happen, that is why if you short this, you need to be very cautious with your stop loss. If you're longing this and you have the account big enough and your money management good enough, you could even, for example, buy here, buy here, buy here, buy here, wait, buy more here, and then you start scaling out, etc. But of course, you need a very big account and a very good money management. But at the end, you can more or less be kind of, okay, at some point, this should reflect fundamental reality. It's like if you have 10% of Coca-Cola stock falling down. If you buy it and it continues moving down, the probability is that at some moment in the future, 1 year, 2 years, 4 years, it will not only recoup but go higher are very high. Because that are the fundamentals of that company. These are the fundamentals for two big economies. The Japanese that has had a very hard time for the latest decades, and the American economy that is shining after 2008 crisis. So if everything happens, the things that need to happen to change both fundamentals could happen, but it would take a lot of time to start materializing. So we have at least 3 years for potential bullish movements in dollar yen. So those are my insights on dollar yen. If you're going to short this, just be aware of the stop losses. Because yeah, you can, for example, if you short, let's say you short here, but you were so close to a very delicious support for a lot of institutional investors that you don't know if maybe a hedge fund say, you know what, let's buy $1 billion of dollar. Let's buy $1 billion yen. And then you see, boom, this moving up to here, and you will say, what's wrong? And then the market could deflate. So those are the risks for shorting dollar yen. For longing, the risks is that you can continue having this. And this doesn't necessarily mean that something is changing. Fundamentally, this doesn't change anything. So I believe it's time to call it a webinar. It's exactly, I believe, 1 hour, because I really don't want to overextend myself that much to make it boring. So I would like to thank, of course, FX Rabbit, my friend, for being around again. Hopefully I will be able to learn from your skills in the daily stock option contest and maybe being lucky one time win you. So I am very glad you're here and that you interact. Really, really thank you, my friend. All the guests, of course, for being around. Community TV, also known as Katarina. Wilco, thanks a lot for being around. You logged in a little bit late, but it's okay. Thanks for visiting me. Katarina, of course, thanks for recording, hosting, and letting people know that I was not going to be able to broadcast these 3 days. And Heoma, thanks for visiting us from India. I hope to see you soon tomorrow. Remember that every day, or usually I try every day, Monday to Friday from 7 to 8 a.m. GMT time. And thanks to you, FX Rabbit. Thanks to you. And well, it's time to leave. Let me see just something interesting happening in dollar yen. Well, no, it looks pretty much the same way that picture was taken. I believe that, yeah, if we continue having sell-off momentum, it shouldn't move way more below 110. Maybe just if you just have the if you believe that this is heading north, you could put a limit order at 110. Maybe at some moment it could be hit. Maybe you wake up one day and you say, oh, it just hit the 110, the 110, and immediately just went to the 111. And you just bought at a good price. And if you are lucky, maybe you could hold that trade for months and months and months, paying interest, being paid interest, and having the price moving in your favor. But, well, you have to consider that with your own money management. So let me close this. Okay, so I missed very much to deliver the webinar. Thanks. Katerina is sharing a YouTube file, but remember that YouTube crashes my computer. I will open it when in some minutes. Okay, let me just have. Okay, it is opening. I will see it once I close the television window. Thanks a lot, Katerina. Thanks a lot, Keoma, or Dioma. I don't know how to pronounce your name. Thanks a lot. Okay, I will listen to it, Kate. En français. I don't know, maybe FX Rabbit speaks French too, I don't know. So I believe it's everything. So remember that I expect you tomorrow, same time, same place. No? Tu ne parles pas français? Ah. I thought you did. You parle no français. No Francis? Okay. Well, now, time to leave. Thanks a lot, everybody. I expect you tomorrow, same time, same place. Remember to trade safe. This is Alberto Alvarado. Be safe, and bye-bye.